Good morning, everyone. Welcome to this revisionary session on Ind AS 19, employee benefits. Most of this we would already have covered when we did the actual classes. You may have seen the uh, videos earlier or been a part of earlier sessions. So what I will be going to take you through is a very quick understanding of some of the concepts followed by problem solving. Okay, so that is going to be our method for today. Okay, so I'll not be delving very deep into the concepts, obviously, because problem solving is going to gain importance. Okay, so with this background, let us start our discussion. Good morning, Aprakesh. Good morning, Manish. Yeah, so with this, let us get started. So Ind AS 19 deals with employee benefits. So largely we are aware of what do we mean by employee benefits. So all employee benefits are categorized into four broad categories. That is short-term employee benefits, post-employment benefits, other long-term employee benefits, and termination benefits. So that is this category, 1, 2, 3, 4. So short-term benefits, typically kind of your salaries, wages, whatever you do, the payments, all of them get covered under short-term benefits. Typically, the payout happens within 12 months and it is for the current employees. It does not include termination benefits. So this is the first one. Post-employment benefits. These are the benefits which get paid on completion of employment. Completion of employment could be either superannuation, wherein you complete your 60 or 58 years or whatever it is, and you end the employment contract. So that is your typical retirement. Or resignation also gets covered. Resignation also gets covered. So after employment ends, what are the benefits that you get? Those will go under post-employment benefits after completion of employment, other than termination benefits. Any other long-term benefits is kind of a residual category. So when I mean any other long-term benefits, these would include items like long-term service award, jubilee award. You haven't left, you are still in the organization, but you have served, say, for 10 years, 15 years, 20 years, 25 years. So the company, the employer feels like rewarding you for such a long association. So that becomes a long-term service award. And finally, we have something known as termination benefits. Termination benefits uh, is paid when an employee's employment is terminated by the company. This is not resignation or retirement. This is termination. So the company ends it. So therefore, the triggering event in the case of termination benefits is an employee being asked to leave the organization. We'll see the technicalities later. Okay. So these are what gets covered under Ind AS 19 in terms of employee benefits. What is excluded is obviously employee share-based payments. Though that is an employee benefit, we have a separate standard for that. And we have accounting and reporting by the plan itself. So that also gets excluded. So this is your broad scope. So when we talk about your short-term employee benefits, typically it covers items like salaries, wages, social security contribution to mean your provident fund, ESI contribution, whatever happens, labor welfare fund, etc. Paid annual plus paid sick leave, this also gets covered. Profit sharing and bonuses, if anything is there. And fourth one is non-monetary benefits. So typically all these get covered under short-term employee benefits. The biggest advantage or the biggest thing which is easy for a short-term employee benefit is the fact that the accounting is straightforward. There is no actuarial valuation required, no complexity. It is getting settled within 12 months. No discounting is involved. Very straightforward accounting that happens where you debit expenses and credit liability or cash. However, if you are constructing or developing an asset, obviously the employee benefit cost related to that asset will get capitalized. If you are constructing your own office building, or if you are developing an intangible asset, then the costs get capitalized into the cost of the asset. Okay, so actuarial assumptions are not required for measuring the obligation. No possibility of actuarial gains or losses because it's not needed within a period of 12 months, undiscounted basis, and no other specific disclosure. Sometimes what may happen, a short-term benefit may be having payouts happening after 12 months. Okay, that is, there could be a change in timing of settlement. If this change is temporary, no reclassification. If the change is not temporary, then consider whether they are truly short term or do they have to be classified under any of the other categories. Are we okay till now? Yes, anybody has any doubts? Short term employee benefits? Please let me know. If not, then I'll proceed further. All right. No classes, then we shall move further. Okay. All right. Fine. Thanks. Just all right. Now we move on. Short-term compensated absences. That is your related to your leaves. So in this case, short-term compensated absences get classified into two types. One is accumulating paid absences. The other is non-accumulating paid absences. Non-accumulating paid absences means what? You cannot carry it forward. You cannot carry forward. Whatever leave is there, it gets lapsed. It gets lapsed if it is not used in full. So cannot be carried forward. Obligation arises when absences occur. So when an employee does not come, then you are getting obligated to make the payment to him because employee service does not increase the amount of benefit. Straightforward, no problem. It just lapses. So that's all that you need to look into. The interesting part is accumulating paid absences. These are absences which get carried forward. So for example, current year I did not utilize my leave. Next year, there is a provision to carry it forward or take cash for it. Okay, so can be carried forward for use in future period if current period's entitlement is not used fully. So obligation arises as employees render service. Current year they have not taken a leave. That means current year they have worked. Because they have worked in the current year, next year they can take a leave. Next year they can get a payment if they are not getting a leave. Okay, depending on the way the plans are structured. So this is the key important fact. Here your liability arises because an employee works extra. In the case of non-accumulating, because he takes a leave, his liability gets accumulated. Are we able to follow? So that is the differentiating factor. So these accumulating paid absences, they get classified into two types. First one is vesting, second is non-vesting. Vesting, they are going to get cash. They are going to get cash for the unused entitlement. They are going to get cash for the unused entitlement. They'll not get leave. Instead, they will be compensated in the form of cash. Are we able to follow? Non-vesting, my leaves which are available, which I have not utilized in the current year, those leaves I'm in a position to carry them forward. I'm in a position to take them in the next year. So for example, suppose I get 7 days per year as leave. Out of 7 days, I have taken only 5 days in the current year. Then next year, I can take 7 days of next year's entitlement plus 2 years of current. So 7 plus 2 days of current. So 7 plus 2, all in all, I can take 9 days in the next year without any loss of pay. That 2 days additionally, what he's taking a leave in the next year, the liability of that arises in the current year because he has worked 2 days extra. Are we able to follow? Yes, are we able to follow? Any doubts? Anyone? Anybody has any doubts? Yes. All right. No doubts. Okay, fine. So with that background, let us come to one of the questions that is pulled from your study module. Okay. Okay. Fine. So illustration 6. Yeah, Manish, tell me, what is your query on vesting or non-vesting? Manish, please feel free to speak up, okay? Uh, Manish ji, could you check they are unable to unmute? Okay, yeah.
Right.
हाँ मनीष बोलिए.
Yes, sir. Sir, ये कैश
बोलिए बोलिए.
sir non-vesting
आप हिंदी में बोलिए, कोई
employer
बात
not
नहीं.
entitled to cash payment.
नॉन वेस्टिंग में नॉट एंटाइटल टू कैश पेमेंट मतलब आपको इस साल में जो अनयूटिलाइज्ड लीव है, जैसे मान लीजिए आपको एवरी ईयर 7 डेज की छुट्टी मिलती है, राइट? तो सपोज
Yes.
कीजिए 7 डेज में से आपने सिर्फ 4 डेज यूटिलाइज किया, करेक्ट? यानी कि
Yes, sir.
आपका 3 डेज का बैलेंस है, करेक्ट? ये तीन
Yeah.
दिन आपको इसके बदले कैश नहीं मिलेगा. 3 दिन एक्स्ट्रा जो काम किया इसके लिए कैश नहीं मिलेगा. ये 3 दिन आपको नेक्स्ट ईयर कैरी फॉरवर्ड हो जाएगा, आपका नेक्स्ट ईयर में कैरी फॉरवर्ड हो जाएगा. तो नेक्स्ट ईयर आपका 7 डेज ऑफ नेक्स्ट ईयर प्लस ये 3 दिन, तो आप टोटली कितने दिन का पेड लीव ले सकते हो? 10 डेज का पेड लीव ले सकते हो विदाउट लॉस ऑफ पे. समझे?
If employee is living in the entity, then
See, if employee leaves the entity, it again, if employee leaves the entity, leaves the organization, then also, if the terms of contract specify that these will, employees are not entitled to a cash payment on leaving the entity, नहीं मिलेगा उनको, right? आप छुट्टी यूटिलाइज करो, आपको हम कैश नहीं देंगे. तो अगर वो सपोज उसका रेसिग्नेशन डेट है 15 नवंबर एंड ही हैज 3 डेज एक्स्ट्रा, वो 11 नवंबर टेक्निकली उसका लास्ट वर्किंग डे हो जाएगा. ही कैन अवॉइड ऑफिस ऑन 12, 13, 14. 15 को रिजाइन हो जाएगा. यस.
sir vesting or non-vesting agreement at initial period decide होता है.
स्टार्टिंग में ही इन योर टर्म्स ऑफ एम्प्लॉयमेंट ओनली इट गेट्स डिसाइडेड. ओके.
Okay. Okay.
Yes, these
Clear.
are, these typically get decided when you join. जब आपके joining formalities होते हैं, that time only they get decided. Many times, I mean, sometimes what could happen is in the course of your employment journey, company may come up with new policies. So basis that we will have to evaluate. In fact, what happens is sometimes in practical life, sometimes what happens is uh, typically, this is the case with PSUs and government entities where employees accumulate their leaves. And then what they do is they take it for certain special events. Jesse, for example, they accumulate 1 month leave and then shadi hai. So they take that 1 month leave. Sometimes what happens, employees accumulate leave and with that accumulated leave they convert it into cash for any purpose. So somebody has taken, let us say, a loan, housing loan. Now housing loan को थोड़ा कम करने के लिए an employee has worked, he has, let us say, 3 months of leave. So he will go to his employer and say, look, I have 3 months of leave, I request you that 2 months of leave you please arrange for an encashment. 2 months of leave he will encash and he can use that to pay off his housing loan. Is it okay? Yeah.
बट सर कैश एंटाइटल कब होता है जब एम्प्लॉय लिविंग द एंटिटी.
Not necessary. See, यहाँ पे लिखा
एंटिटी.
है vesting. I was just giving you an example, not in particular connection with on leaving the entity or not. Okay, so it depends. I was just giving examples of आपके policies कैसे structure हो सकते हैं, right?
ओके सर, क्लियर.
ठीक है. All right, fine. So this is clear. So we can proceed. हाँ, Abrikesh, tell me.
Sir, general practice in the organization, mainly corporate houses, is that after accumulating certain number of leaves, say 240 or 360, that
Yes,
will has dealt. Company will automatically encash that, irrespective whether you are leaving the job or not. It's
that is
like that
also
actually.
fair.
It's not only on retirement. I mean, leaving the job.
That is also fair enough. We have seen lot of cases where sometimes, in fact, in my previous organization where I was working, every year 15 days leave was entitled, out of which 7.5 days you have to take, and 7.5 days they will encash it automatically if it is unutilized.
Yes, sir.
So it depends. I mean, each organization will have different leave or different HR related policies. In one of the companies, we have seen where sick leave gets carried forward. In many companies, sick leave does not get carried forward. Casual leave does not get carried, but sick leave getting carried forward means that it falls under of a different kind of an employee benefit. So it depends, employee organization to organization. Here, what we are doing is we are understanding the principles. Then accounting will happen in a different manner altogether. Is it okay? Yeah. All right. Fine. Any other questions? Yes. All right. Yeah. That's right, Swami. That's right. Okay. Geeta, all clear?
Yes, sir.
All
Yes.
right. And I think there are no queries on the. Okay, fine. So with that, let us come to this question. Acer Limited has 350 employees, same as 1 year ago. The average staff attrition rates observed during the past 10 years represents 6% per annum. Okay. Average staff attrition rates means 6% of your employees leave on an average. Okay. Now, Acer Limited provides the following benefits to all its employees. They get a paid vacation 10 days per year, regardless of date of hiring. So somebody joins on the last day, he will also get 10 days of paid leave. Okay. Next. Compensation for paid vacation is 100% of employee's salary, and unused vacation can be carried forward for 1 year. So unused vacation, you can also carry it forward for 1 year. As of 31st March, unused vacation carried forward was 3 days per employee. 3 days per employee. Average salary 15,000 per day, and accrued expenses for unused vacation in X0 X1 was 65 lakhs. During X1 X2, employees took 9 days of vacation on an average. Salary increase in X1 X2 was 10%. How would Acer recognize liabilities and expenses for these benefits as of 31st March 20X2? All right, fine. So let us start to solve this. This is taken from your study mat only. But anyways, we shall proceed to solve. All right, fine. What is my unused entitlement?
3 days.
3 days. This is illustration 6. Okay. Unused vacation 3 days as on 31st March 20X1. You can write along with me. Okay. 3 days per employee. In the next year, they will again get a fresh balance of 10 days. Yes. Entitlement to vacation for X1, X2. A fresh balance of 10 days. Correct?
Sir, 7 days, na?
नहीं यहाँ पे this is 10 days per year.
Okay.
Right? As of 31st March, X1 3 days was carried forward, and during X1, X2, employees took 9 days of vacation. So they are taking 9 days of vacation. Average vacation availed in 20X1, X2. 9 days per employee. So therefore, आपका balance कितना रहेगा? What will be the balance left? 4 days per employee. Correct? Unused vacation as on 31/3/20X2. Are we okay till now?
Yes.
Acha. Now, what does this 4 days per employee represent? At 31st March X2, as a company, you owe the employees 4 days of leave. समझ में आ गया आपको? Yes? Did you follow? You owe them 4 days of leave. Means if somebody takes 4 days of leave in the next year, you still have to pay them the salary. You still have to pay them the salary. Are we okay? Yes? Sure?
Yes.
So, in other words, in accounting words, can I say that this represents my liability as at 31st March 20X2? Yes or no?
Yes,
Yeah?
sir.
This represents my closing liability. Acha, sir, closing liability ho gaya, but tell me one thing. How am I going to measure it? Sir, you have to measure it by using the salary rate. What is the salary rate? Because 20X0X1, the salary is 15,000. 20X1X2, the salary is not 15,000. It is having an escalation of 10%. So that comes to 16,500. आप कौन सा salary लोगे? Will you take 15,000? Will you take 16,500? So the question arises, कैसे लेंगे? This 4 days pertains to which year? In the absence of information, we assume what? We assume leaves get adjusted on a FIFO basis. On a FIFO basis. That means old leaves get utilized first, and then you go on utilizing the other leaves. So therefore, out of 10 days, out of total 13 days of leave, he is availing 9. Employees are availing 9. That means this 9 is coming from where? First, they will utilize 3 days of opening balance. And then 3 दिन हो गए, so 9 minus 3, 6. Remaining 6 will be utilized out of current year's entitlement. So therefore, 4 days per employee. These would be unutilized leaves of 20X1, X2. Are we able to follow? Yes? Yes or no? Geeta?
Sir, first he utilized 10 and 3 and then 9.
No. See, 10 is your entitlement. You can take so much of leave. आप इतना leave ले सकते हो. All employees on an average have actually taken 9 days of leave. How is this 9 coming? This 9 is coming as 3 days from opening balance and the remaining 6 days from current year. Are we able to follow?
Okay, yes, sir.
This is FIFO. This is an assumption that you are making, which is a very logical assumption, Okay. So being unused leaves of X1, X2 carried forward. Is everybody clear about this? Yes.
Yes, sir.
All right. Okay. Geeta समझा ना?
Sir, हाँ sir.
Okay. Sometimes the questions can give you the manner in which the leaves are adjusted. They will tell you follow LIFO method. In that case, please don't make assumption of FIFO and solve, because the question will specifically tell what is the mechanism. If the question is silent, you are free to choose and use something logical. Okay, like FIFO is a very, very logical methodology. Okay, so 4 days per employee comes out of current year. Acha. Now tell me, this calculation, is it for new employees or is it for existing employees?
Existing.
Existing. Yes. Agreed, everyone? Existing. Okay, so this is for existing employees. How do I know that?
Because what we are making is a calculating liability for the particular year, and new employees were not there in that year.
No, new employees are there now. When you are having a 6% attrition, it means you are replacing them. So what is the thing which is making you understand or believe that this is for existing employees? Come on. Unused vacation as at opening of the year. This can be only for existing employees, na? जो
Yes,
छोड़ के चले गए उनका तो होगा नहीं. Yes.
उनका भी नहीं होगा, और नया है उनका भी नहीं होगा ना सर.
उनका भी नहीं होगा. Yes, that's what. So the fact that these have opening balance of leaves means this is in respect of existing employees. And what is the existing employee percentage? 94%. How did I get 94%? 6% attrition. So 100 minus 6, 94%. So total unused vacation as on 31/3/20 is how many employees the company has? 350 employees. 350 employees into 94% multiplied by 4 days per employee. Any doubts here?
No, sir.
No, sir.
So totally 1316 man days. That's right, Swaminathan. All right. So 1316 man days. You owe this to your employees. Okay. Now B, for new employees who make up 6% of the workforce. Attrition means rate of employees leaving. Okay. So sometimes what students think, chale gaye na, that means my workforce is only 94%. Answer is no. If 6% leave, they will be replaced. So that is our fundamental understanding. Okay. So let us not get imaginative by saying my workforce is only 350 into 94%, 329. No. 6% they will do the hiring is what we assume. That is more logical. Okay. So entitlement to vacation. Tacha, will these employees have opening leave balance?
No, sir.
No. These are fresh employees. So currently they will get 10 days per employee, correct? Out of 10 days, average vacation availed in 20x1 x2. This is the same 9 days per employee. So out of 10, 9 is utilized. That means 1 day per employee is left as unused vacation. Unused vacation as at 31st March 20x2. Are we able to follow? Yes. Number of employees or total unused vacation? You will help me with this. Look at the last calculation and tell me what will be the working for this. Come on. Manish has given the answer. What about the others? Yes, in man days. How many man days? Anybody? Use the same calculation method that I have highlighted and tell me how do you do this. Come on, 2 सेकंड का एक्टिविटी है ये. Quick. बोलो यार. Don't hesitate. Even if you are wrong, it's okay. All right, everybody gave the answer. 350 employees multiplied by 6% multiplied by 1 day per employee. So that comes to 21 man days. So I owe as a company 1,316 man days to existing employees and 21 man days to the new employees. So therefore, total unused vacation is how much? 1,337 man days. 1,337 man days. Now, average salary per day, we have already calculated 16,500. So, multiplied by, therefore, leave obligation. Leave obligation, or rather, unused paid vacation obligation. How do I calculate this? 1,337 man days multiplied by 16,500. Yes or no? Perfect. So how many of you have reached this stage? 2 crore 20 lakh 60,500. Yes. Any doubt so far?
No, sir.
All right, fine. Achha. So this is the liability that needs to be created in the current year. So entry for this will be employee benefits expense account debit to provision for leave encashment. 2 crore 20 lakhs 60,500. Any doubt so far? Yes.
No, sir.
All right. Now, compensation for paid vacation is 100% of employee's salary, and unused vacation can be carried forward for 1 year. Can be carried forward for 1 year. That means what? That means what? At the end of 1 year, you cannot carry it forward. Okay. So now let us understand. Compensation. Okay. Look at these words now. Because the key is you need to understand the policy. Compensation for paid vacation is 100% of employee's salary, and unused vacation can be carried forward for 1 year. Okay. Now see, what does it mean? Suppose these employees, I owe them 1,316 man days to existing employees. If they do not utilize this leave, I can carry it forward for 1 more year. That's it. At the end of the next year, can I carry it forward to the next year? Can I carry it forward to the third year? Answer is no. That means what? The leaves lapse. But if the leaves lapse, if you read the policy, it is saying compensation for paid vacation is 100% of employee's salary. That means if he is not availing the leave, we will give him cash. Yes or no? We will give him cash. Are you having any doubts? Are you having any doubts? Yes or no?
No, sir.
No, sir. Clear.
So therefore, if he is not utilizing, so I have to pay that off. I have to pay that off. So therefore, in this question, there is an existing provision of 65 lakhs. There is an existing provision of 65 lakhs. So let us make that as our payout. Provision for leave encashment debit to bank. Are we okay with this? Yes.
Sir, in FIFO method, no days
In
is
FIFO
left.
method,
No,
no days are.
uh, any year no days are left for,
क्यों? ऐसा क्यों लगता है आपको?
because first utilize previous year's days na.
Okay.
If this questions is used solved by LIFO method,
Okay.
then
It is possible that previous year's leaves will be outstanding, correct? What you are saying is right. But let us take a hypothetical scenario. Nobody avails leave in the current year. That means what? Opening 3 days leave will be there. Current 10 days
yes,
entitlement will be there. Nothing is availed. So unused vacation is 13 days. So 13 days may say 3 days is FIFO
yes.
pertaining to last year. Yes.
Hmm.
So this is a very macro level calculation which is done in this question. But in reality, how does HR give this working? They will have to do it employee wise. Yes or no? They will have to do this calculation employee wise. And employee wise, not everybody will take 9 days. Somebody will take 2, somebody will take 11, somebody will take 10. Depends. Okay, so the average is coming out to be 9 days per employee. All right. So this 65 lakhs
So it is
went
a
out.
vesting condition, na, sir?
Which one?
Here in these questions,
Mm-hmm.
it is a vesting condition, na?
Which is a vesting condition, beta? Go ahead.
Because companies give the money.
It is a combination of two. It is a combination. I am allowing them to carry forward for 1 year. So it becomes non-vesting accumulating paid absences. At the end of 1 year also, if they do not utilize, then I'm going to make cash payment. So that becomes a vesting payout. Are we okay with this?
Yes.
It's a combination of both. Yeah. So this 65 lakhs pertaining to previous year's vesting is now going to get paid off. That's right, Swaminath. That's right. Okay. So is the question absolutely clear? Yes. No doubts. So we move ahead. We move ahead. This question is done. Okay. The next type of short-term benefits is profit sharing and bonus plans. So here, sometimes what happens, a percentage of profit is paid to employees to keep them motivated. Sometimes you pay bonus. So both of them again come under employee benefits. Okay. Now, fact is that sometimes there is no written agreement between employer and employee, but there is a practice. Okay, no legal obligation, but entity has a practice of paying bonus. Generally in India, we have a bonus concept where 8.33% of the salary we may end up making payment as bonus. Okay, there is some restriction, some upper cap limit also to your salaries for that. But suppose there is no legality involved in payment of bonus and still you pay. Can I say that the fact that you are still paying the bonus, is creating an expectation in the minds of the employees? Can I say that? Bolo yaar.
Yes, if it is a practice, then yes, employees
Yes.
always expect.
Employee will always pay. If suppose you pay bonus in and around Diwali time, तो एम्प्लॉय दिवाली आते ही आपके सामने झोला फैल के बैठ जाएगा. Yes, he will expect the bonus. To say in a simple language, he will expect you to give the bonus. If you don't give, can he legally take any action? If there is no agreement, can he legally take any action?
No.
No. But can you sustain operations if you don't give bonus?
Yes, sir.
Yes.
Not necessary. They are key
Leave.
employees, soch lo. And if they do not get bonus, do you think that they will do good work?
Yes,
Really?
sir. It has to be done, but the bonus is not a criteria for good work.
Yeah, don't be idealistic. Be practical. Okay? Be practical. They have to do good work regardless of bonus. I am with you 100%. But suppose you have been paying bonus for 10 years around Diwali. 11th year you did not pay. Do you think 11th year the employee will work in the same manner as he has worked for 10 years?
No,
Answer
sir.
is no.
Efficiency is down.
Efficiency will definitely hit. It will be a demotivating factor. It will be a demotivating factor. ये साल employee ने नहीं दिया bonus, तो हम क्यों बैठे, right? So my point is this: see, employee will not do anything untoward legally because he cannot do. Company is totally I mean, I cannot fault the company for not paying the bonus if there is no legal obligation, there is no contract. But practically, the company cannot live without paying the bonus. The company cannot carry on operations normally if it doesn't pay the bonus. Attrition rate will go, like Swaminathan is giving. Products will start losing quality. Employees will leave. Your name gets spoiled in the market. Tarah ke rumors will start running. You'll see that company, 10 years it used to pay bonus. 11th year it did not pay. There must be some problem. It must be making losses or there may be a cash flow problem. All kinds of news will go in the market, right? So therefore, there is no realistic alternative other than paying the bonus. Are you able to follow the language? There is no realistic alternative other than paying the bonus. Yes or no?
Maybe
Yes. There is no realistic alternative. We call such obligations as constructive obligations. कौन सा obligation? Constructive obligations. The other type of obligation is legal obligation. Legal obligation is pursuant to a contract or a statute. तो उसमें तो you have to pay. There is no other go. The pressure for doing the payment does not come by way of a statute, but it comes by virtue of a past practice. It comes by virtue of a past practice. Yes, and past practices you cannot change. You cannot let it go. Are you able to follow? Yes. Hello.
So,
So therefore, you have to do the payout. So even though there is no legal obligation, practically there is no realistic alternative apart from paying the bonus. Okay. Next. Now these profit sharing bonus plans, they could be formal plans where there is a formula given. This much percentage of bonus, this much percentage of basic salary, this much percentage of CTC, all that would be given. Amounts are determined by the entity. Past practice gives evidence of the amount. Past practice gives evidence of the amount. Okay. So that is the meaning of your profit sharing and bonus plans. When you measure, you should reflect the possibility that some employees may leave without receiving share of profits or bonus. Are we able to understand this? Yes. Be realistic. Be realistic. It doesn't matter that all employees will get the bonus. For example, let us suppose one of the conditions for bonus is employee should have served for the entire year and he should be in service as on the date the bonus gets disbursed. He should be in service as on the date bonus gets disturbed. This is part of your HR terms and conditions. Now, you come to know that one employee has resigned in the last month of the year. You come to know. Will he be entitled to bonus? Will he be entitled to bonus? बोलो यार, will he be entitled to bonus?
as per policy, no.
As per policy, no. So your calculations must show that. So measurement should reflect the possibility that some employees may leave without receiving the share of profits or bonus. You cannot just take bonus liability multiplied by number of employees. No, that is too rudimentary. That is a very crude form of accounting. Be realistic in your provisioning. Don't say so many employees, I have to pay them bonus. No. Somebody may be serving a notice period. Somebody may have joined in the current year and not be entitled to the bonus. So the requirements keep varying, and therefore your workings should reflect the fact that some people may or may not be entitled to the share of profits or bonus. Are we able to follow? Yes. So that closes our short-term employee benefits. Okay. Now come to illustration 8. Come to illustration 8. Anybody has any doubt so far?
So in a
Yes.
constructive and legal form is there, no?
Yes.
In both the case, there is entry and all are same.
Yes. Everything is the same. Everything is the same.
Only reading is different means.
Yes. लीगल में डॉक्यूमेंट है, कंस्ट्रक्टिव में डॉक्यूमेंट नहीं है, पास्ट प्रैक्टिस है. Yes.
Okay, sir.
So that we call it as a constructive obligation. Okay. Now I'll just go back a couple of years, and if you remember, there was this Taj hotel which was under siege in 2008, if you recollect, right? About
26/11. 26/11.
26th November, right? 26th November 2008. It was close to around, I think, around 17 years back. Yes. At that point of time, IHCL, that is Tata's, they did way beyond the call of duty. Yes, they did way beyond the call of duty. They said, now that obligation, was it legal? Answer is no, but it was constructive. Now the expectation from the group automatically becomes higher. Automatically becomes higher. If they do not meet those expectations, the intangible value of Tatas will drop. So therefore, they do have to meet the constructive obligation which they themselves have set up. Are you able to follow? Entries will be the same. It's just that the basis for those entries is no longer a document. It is your own bar of expectations which you have set. Correct?
Yes, I understand.
So many times companies bar set ही नहीं करते, right? जो पेपर में है ले लो, जो पेपर में नहीं है मत लो. Yes, that is how some of the ordinary companies typically work, right? Okay, fine. So coming to next illustration, Acer has 350 employees, same as a year ago. The average staff attrition rates observed during the past 10 years represents 6% per annum. Acer provides the benefit to the following benefits to all its employees. Same data hai. Annual bonus during the past 10 years. Acer paid bonus to all employees who were in service during the year, during the entire financial year. That means what? Remember, 6% is the attrition rate. That means, will the 6% employees get bonus? Bolo yaar.
No.
Maybe if they left after March, then they may get.
Nahi. Who were in service during the entire financial year. If they left after March, they were in service. So then we don't call them as attritions, na? Attrition happening
Yes.
during the year,
Okay.
it becomes an attrition. After
Agree.
the financial year becomes attrition of the current financial year. Yes.
Yes.
Bonus
Okay.
was paid in June following the financial year end. Amount of bonus for X1, X2 paid in June 20X2 represented 1,25,000 per employee. So they had paid a bonus of 1,25,000 per employee. Acer Limited used to increase amount of bonus based on official inflation rate, which is 8.5% for X2, X3. Although there was no legal obligation to increase the bonus by such an inflation rate. How would Acer recognize liabilities and expenses for these benefits? Pass the journal entry to show the accounting treatment. Okay. 20x1 x2. What is the bonus paid?
1,25,000.
1,25,000 per employee. There is a practice to pay an amount factoring the inflation. Yes or no? Bolo.
Yes.
Yes, sir.
So when there is a practice to pay the bonus with inflation, what will be the liability for 20x2x3? Bonus is equal to 1,25,000 plus 8.5%. 8.5%. Yes. Yes or no?
Yes, sir.
Yes, sir.
So that comes to how much? 1,35,625
135, 625.
per employee. Therefore, total bonus liability 135 625 multiplied by how many employees? How many employees? Is it?
350 into 94%.
Yes, 350 into 94%. I hope you are all able to understand why 94%. Yes?
Sir, yes, sir. 329.
Yes, 329. 4 crore 46 lakh 20,625. Yes, absolutely. So entry will be what? Employee benefit expense account debit 625 to provision for bonus. Yes. So that takes care of this. Anybody has any doubts so far? Shall we move further?
Yes, sir.
All right. Right. Just give me a minute. Just a minute. Okay, so with that, we conclude the short-term employee benefits. Okay, and now we move on to post-employment benefits. Again, quickly, post-employment benefits, benefits that get paid on completion of employment, not termination, completion of employment when an employee leaves, either due to retirement or resignation, whatever it is. Okay, we call that as post-employment benefits. Now, post-employment benefits get classified into two types. One is defined contribution plan. The other is defined benefit plans. Defined contribution plans, typically examples include provident fund, which you do the payment. In provident fund, my obligation is to make the payment of employer's contribution. Yes, once I make the payment of employer contribution, my job is done. Then whether the employee gets 5% return or 15% return on that balance, it is not my lookout. Whether his money doubles in 7 years, doubles in 15 years, it doesn't really matter to me because I have fulfilled my obligation. So effectively, the burden in the case of a defined contribution obligation, the defined contribution plan, the burden of returns on investment, the burden of the investment not going as a failure, the burden of actuarial risk, all these burdens are on the employee's head, which is why provident funds and all, they put their money in very secure instruments. Are we able to follow? Yes. They put it in government securities, gilt-edged securities, and a very small portion they will put it in some other mutual fund or something. A very small portion, minuscule portion. Okay, some may not even do that. But the fact is that these funds are for the security of the employee. They are for the security of the employee. Are we able to follow? Yes. So this is an example of a defined contribution plan. The opposite is defined benefit plan. Here, I am defining the benefit. In this case, I was defining the contribution. PF, your contribution is 12% of basic. You have defined the contribution that you will be making. You make that contribution, your headache is over. Defined benefit. Here I am defining the way a benefit is being calculated. I am defining the way in which a benefit is being calculated, or in which a benefit is calculated under a statutory requirement. Gratuity. How do I calculate gratuity? Anybody? How do I calculate gratuity?
Number of completed years more than 5 years,
Yes.
multiply by half day's salary.
Yes. Multiplied by half day's salary based on which salary? Last drawn salary.
Last
Right?
drawn salary, yes. And
Absolutely.
that also basic amount.
That also basic amount. Okay. And if there are terms of employment which require DA to be considered for retirement benefits, then that also ends up getting covered. But mostly it is going to be, as you said, basic salary. All right. Now, in this case, if an employee's last drawn salary is, say, 10 lakhs per month, the formula will be calculated based on 10 lakhs per month as his salary. Yes, I'm just taking a hypothetical figure. So the onus of payment of gratuity in line with the formula falls upon whom? It falls upon the employer. That means what? That means if there is any possibility of a default, for example, in the year of retirement, the company comes and tells the employee, look, मेरे पास कैश नहीं है तो थोड़ा मैनेज कर लो. Will the employee, can the employee take the employer to court for settlement of benefits?
Yes.
Answer is yes. Answer is yes, because this is a defined benefit plan. This is a defined benefit plan. Benefits are crystallized. Benefits are crystallized. Defined contribution plan. The fund delivered 6% rate of returns, whereas market instruments in mutual fund and all delivered close to 12%. Can the employee come to the employer and say, market is giving me 12, you are giving me only 6, give me the balance 6? Can the employee demand that in the case of a provident fund? Answer is no. Employer will say, मैंने contribute कर दिया, now it is not my responsibility. But defined benefit plan, employer is responsible. Employer is totally responsible for ensuring that the benefit which is defined is paid to the employee. So in such cases, now please pay attention. The risk of payout, the risk of the employee's salary going up, the risk of employees continuing in the organization till they retire, all these risks come on whose head? All these risks come on the head of the employer, come on the head of the employer. Are we able to follow? Yes. Are we able to follow? Geeta, you are able to follow?
Yes, sir, yes.
So
Yes, sir.
suppose थोड़े employers हैं, they say, I want to be protected on cash position. मेरे को surprises नहीं चाहिए. तो ठीक है. Every year you make a provision for gratuity. That gratuity, I will, whatever provision you make, we will set it aside and put it in a fund. हम उस फंड को सिर्फ एम्प्लॉयमेंट बेनिफिट्स के लिए यूज करेंगे. Employer said, okay. So they put all those monies in a fixed deposit. They put all those monies in a fixed deposit with a scheduled bank. The intention is not to make money out of this. The intention is to ensure they have cash to settle the employee liabilities as and when they become due. Now, these fixed deposits give them a return of 6 to 6.1%. Very fine. तो चलता जाएगा. At the time of what you can say, retirement or resignation, they note that the investment which they had put in fixed deposit, rate of interest more or less continues to remain the same. But outside, your employer's salary may have gone up. Your plan formula is in any case fixed. Okay. What happens is, I don't have sufficient cash to meet my obligation. I don't have sufficient cash to meet my obligation. Can it happen? Answer is yes. In that case, can the employer go to the employee and say, देख, मैंने तेरे नाम पे FD बनाया था. FD has fetched me only these rupees, whereas your gratuity is so much. Please manage with this. Can I say that? Answer is no. You cannot. You are responsible even for the investment risk. You are responsible even for the investment risk. Any doubts so far?
No, sir.
Yes. Somebody spoke? All clear?
Yes, sir.
All right, fine. So now, employee defined contribution plan, very simple to account. Employee benefit expense account debit to bank. This is for the monthly social welfare, social security contributions, etc. that you do. Okay. The key point is, okay, fine. So that is done. Next. Then we have certain plans. I had told you to read this. Have you read this, anyone? Yes, have you read this? Because most of these people are students who were there. Most of you have attended the main session also. right? So do you recollect this? So my post-employment benefit plans could be multiple, could be structured in multiple ways. Okay. Sometimes what happens, we call them as multi-employer plans. Multi-employer plans means I will pool the assets contributed by entities which are not under common control. So for example, L&T, Reliance, Tata, Tata Steel, for example. Tata Steel, L&T, Reliance, all of them come together and put their monies in a common pot. They put their monies in a common pot. And from here, the benefits will go to the employees of these three companies. The benefits will be paid to the employees of these three companies. इसको हम लोग बोलते हैं, we call this as multi-employer plans. We call these as multi-employer plans. Okay. Who will contribute? How much they will contribute? Reliance will pay how much? Tata Steel will pay how much? Who will decide that? So contribution and benefit levels are determined without regard to identity of the entity that develops the employees. Okay. Could be defined benefit plan or a defined contribution plan. In both cases other than state plans. So multi-employer plans could be categorized into both the categories. Okay. All right. Fine. Just theory. Nothing to do. Okay. All right. Fine. Then we have group administration plans. Group administration plans. Post the assets contributed by various entities which are not under common control. Aggregate single employer plans for investment purposes and to lower investment management and administration costs. Basis claims of different employers are segregated for benefit of own employees. Okay, so this is your example of group administration plan. Again, I could treat it as a defined benefit plan or as a defined contribution plan. Are we able to follow? Yes. Are we able to follow?
Yes.
So yeah, please go through this. Okay, you can go through this for homework. State plans, similar to Provident Fund, what we do. Insurance is another way. Yes, accounting for defined contribution plan I have seen. Coming to defined benefit plans. Accounting for defined benefit plan. Is it going to be simple or is it going to be complex? It is a very complex activity because it requires estimate of a lot of things. Sir, what all will it estimate? Stay with the company. Will employee stay for such a long time? Attrition. Will he be alive for such a long time? Mortality. Will he be physically fit to work or will there be some disability? So disability testing. Discount rate to be used to discount liabilities to the present value. To discount value to the present value. Liabilities to the present value. Benefit levels borne by the company plus future salary increase. Tax is payable on the income earned by the plan assets. And various other estimates to be made, discussed later. Okay, so all these kind of problems are what we are going to face when we do defined benefit plans. Are we able to follow? Yes. So it becomes pretty challenging for us to really understand how to do the accounting. Because tell me one thing, an employee joins today at the age of 30 years. Now, when he retires, it will be 60. When he retires, it will be 60. When I have to estimate the gratuity, when will gratuity be paid? Payment कब होगा gratuity का?
On retirement.
On retirement. That means at the end of the 60th year. Yes or no?
Yes.
That means if Okay. Second follow-up question. When does gratuity accrue? Does it accrue at the end of retirement? At the end of at the end of service?
Every year.
Yes, it is a gradual increment. It is a gradual increment. Problem is, how do I measure the gradual increment? Yes, problem is, how do I measure the gradual charge? That is exactly what IND-AS 19 tells us about. That is exactly what IND-AS 19 tells us. Okay, so I will run you through the procedure for accounting, and then we shall do one question which takes care of your overall accounting. Is it okay? Yes. Is it a little
Yes.
heavy, or are you guys able to understand?
Sir, it's not heavy, but it's a complex.
It is a complex activity, right? What about others? Manish, Swaminathan, Geeta?
Yes, sir. Understand, but
Okay, so what we do is we take a quick 5 minute break. Okay, we take a quick 5 minute. It's almost 8:20. So I think we'll take a break. We shall resume at 8:30. Okay, and then maybe in between I can do some questions. So take a quick break, because this is a fresh topic and this is a slightly complex one. Normally, when I do the sessions, if you recollect, up till the break, I would do short-term benefits. After the break, I would introduce defined benefit plans and close at the end of day one. Day two, we would be discussing defined benefit plans only in detail and do the problem solving. Since I'm condensing it into one day, so therefore it's going a little fast. So my suggestion, we take a 10-minute break now. We shall resume at 8:30 with accounting for defined benefit plans, and that should kind of close the revisionary session. Are we okay with it? Yes, everyone?
Yes, sir.
Okay, fine. A break till 8:30. Yes. Okay, fine. So coming back to our discussion, defined benefit plans. So these are typically expenses or benefits which will be paid to an employee at the end of the tenure. At the end of the tenure. So we need to estimate that tenure. Okay. Typically, it is definitely beyond 12 months. So it will be paid at the end of the tenure. Number one. How much tenure? I do not know. I have to estimate. I have to capture all the actuarial assumptions. What actuarial assumptions? I will be capturing the fact, the assumptions regarding whether he will continue for so long, whether he will live for so long, whether he will be physically fit to work for so long, what will be his salary, what will be the yearly increment that I will offer so that I can estimate, how will the market salaries move. All these financial and demographic assumptions will be made when I do the calculation of the ultimate amount of benefit that I will be paying the employee at the end of the tenure. At the end of the tenure. Okay. So this is the first step. This is the first step. Assumptions are done to determine the amount of benefit that will be paid. To determine the amount of benefit that will be paid. That is the first one. Determining the ultimate cost of benefit. Determining the ultimate cost of benefit. Ultimate cost of benefit is the benefit that will be paid at the end of employment. So this is the first one. This is the most important and most complicated step. This is the most important and most complicated step because it involves lot of assumptions, lot of estimates. Second, discount it to determine the present value. Sir, will I be paying this at the immediately? Answer is no. I will be paying it at the end of employment. So therefore, I will have to bring it to the present value. This is the second complicated thing because isme you have one thing estimating the discount rate. And the second important fact is you have to do a discounting working backward. So that is the reason this becomes complicated. The first one is complex because of assumptions. The second is complex because of calculations. The third one, suppose you would have invested an amount in fixed deposits or plan assets or whatever you call. Then I will have to determine the fair value of the plan assets. So when I do this, the first two steps will give me the liability in today's value. Liability in today's terms. And plan assets fair value gives me the fair value of today's assets meant for employee obligations. The difference between these two could be a deficit. Deficit means what? Liability is more, asset is less. Or it could be a surplus. Or it could be a surplus. Are we able to understand the first step? Yes. Did you understand the first step? Bolo yaar. Yes. Any doubts? Yes or no? Hello. All right. That is understood. ठीक है. Geeta, Manish, Abrikesh, all clear? Okay, fine. We proceed further. I assume they have understood. Okay. All right. The deficit or surplus from step one is to be adjusted for any effect of limiting a net defined benefit asset to the asset ceiling. Okay. We'll see this later. Once I do these two things, then I will work on recognizing what should go in the P&L. In the P&L, three items will go. current service cost, past service cost, net interest on net defined benefit liability. So current service cost is basically whatever benefit I have calculated that will be paid at the end. I will attribute it over the period of service. And when I discount it to the present value, that will be the current service cost, the worth of what each employee works for the retirement benefit. That becomes my current service cost. Then I have something known as a past service cost. What is a past service cost? Past service cost is nothing but, suppose there is a change in your salary structure with arrears, then that comes in as a past service cost. That comes in as a past service cost. I will take the impact immediately. I will take the impact immediately. Okay. And gain or loss on settlement. Suppose you curtail and settle the plans. You terminate the benefit plan, in which case you have to give a compensation. So you terminate and you give the compensation. We call that as settlement of the plan, curtailment and settlement. So gain or loss on that. And finally, net interest on net defined benefit liability. So what happens? My ultimate benefit is payable at the end of the tenure. So I discount it to the present value. So when I discount to the present value, every year I will now unwind the discount. So interest will come on the liability portion. That is one, interest expense. At the same time, you have put money in your investments. Those also will fetch returns. So that is known as interest income. That is known as interest income. This becomes your interest expense. The net interest is what is known as net interest on the net defined benefit liability. So net defined benefit liability, we have determined the interest. Step 4, determining remeasurements to other comprehensive income. Suppose there is a change in actuarial gains and losses. Suppose there are return on plan assets excluding net interest on the net defined benefit liability or asset, or any change in effect of asset sale. All these three things will go into your OCI, and it is a non-reclassifiable OCI. So what do I mean by return on plan assets excluding net interest? What happens? Your investments will fetch you some return, but their fair value also can be different. Yes. So when the fair value is higher than the interest that they gave, we call that as return on plan assets over and above the net interest. Are you able to follow? Yes. Are you able to follow? Bolo. Yes. So that becomes your excess return. Is it okay? So this is how the structured accounting will happen. This is how the structured accounting will happen. Calculate ultimate cost, apportion it over the tenure, discount it to present value. That becomes your current service cost. The discounted value, you will treat it as your current service cost. Build the liability. So you have a liability sitting there. Fair value of plan assets. So net difference will become net defined benefit obligations. So that is the first thing that you do. Next one, adjust it for any asset ceiling. We'll see that. Recognition in statement of P&L. Current service cost goes in P&L. Past service cost, gain or loss on curtailment and settlement in the P&L. Net interest on net defined benefit plan also will go to your P&L. In the actuarial assumptions, in respect of items which go to other comprehensive income as a non-reclassifiable item. Okay. मनीष जी आपको थोड़ा अनम्यूट करना पड़ेगा शायद. ओके सबको. All right. Okay. Fine. So now remeasurement of net defined benefit liability is happens on account of return on plan assets exceeding the expected return. Okay. change in asset ceiling, and actuarial gains or losses. All these three items cumulatively will go into your other comprehensive income. Are we okay with this? Are we okay with this?
Yes, sir.
Yes. Fine. So now we shall come to one of the questions which is there in your study material. Just a second. Yeah. Okay. I hope you can see the screen. The question, illustration 15. AJ Limited is engaged in the business of trading of chemicals having a net worth of 150 crores. The company's profitability is good, and hence the company has introduced various benefits to keep them motivated and to ensure that they stay with the organization. The company is an associate of RJ Limited, which is listed on the Bombay Stock Exchange in India. Why do they mention this? Just to show that India applies. The company initially did not have any HR function, but over the last 2 years, the management set up that function, and now HR department takes care of all the benefits related to employees and how they can be structured in a manner beneficial to both employees and the objectives of the company. One of the employee benefits involves a lump sum payment to employees on termination of services, and that is equal to 1% of final salary for each year of service. Consider the salary in year 1 is 10,000 and this is assumed to increase at 7%. Taking a discount rate at 10% per year, compute benefits attributed year on year. Obligation in respect of this benefit. For an employee expected to leave at the end of year 5, following assumptions may be taken to solve this. There are no changes in actuarial assumptions, no additional adjustments needed to reflect the probability that the employee may leave the entity at an earlier or later date. Are we able to follow? Yes. Go through the question once. Go through the question once. Go through the question once. Tell me if you haven't understood anything. Actual question starts from here. Okay. Once you're done, please let me know. Yeah, go ahead.
Yes.
Done? Okay. So what is the first step? First step. They have asked too many things, but first step आप कहाँ से शुरू करोगे? They have asked year on year benefits, right? Yes or no? Tell me.
Yes.
Yes. So year on year benefits, how do I calculate? Find out how much is payable to them
Cumulative.
cumulatively. Then I have to divide it into the number of months. The number of months or number of years of service. Yes or no?
Yes.
Bolo? I have to discount it to the. So first I will determine the benefit, a portion over tenure, then I do the discounting. That will give me benefits attributed year on year and the obligation in respect of this benefit year on year. So benefits as well as obligations, both of them year on year we will be getting. Okay. For an employee who is expected to leave at the end of year 5. Okay. Okay. So let us look now. Calculation of obligation. This is the ultimate cost of benefit. Ultimate cost of benefit. How do I calculate? Sorry, not this one, not this table, this one. Yes. How do I calculate? Well, salary is 10,000 in the first year. They have given it, right? Salary in year 1, 10,000, estimated to increase at 7%. So year 1, 10,000, year 2, 10,700, 11,449, 12,250, 13,108. Are we okay with this? Yes. Am I okay with this calculation? Anybody
Yes.
has a doubt here?
No.
Now, so finally what will be paid? 13,108. Correct? 13,108. Now, when are you going to make this payout? At the end of 5th year. But the cost pertains to which year? Cost pertains to which year?
First year.
Nahi Baba. 13,108.
Fifth year.
5th year. This is the 5th year. Yes or no? But when the payment will happen in the 5th year, that is okay. But cost pertains to which year? Is it year 1? Is it year 2? Is it year 5?
During
Is
the
it
fifth.
all the years?
All the year.
All the years. हर साल वो मेहनत कर रहा है तब जाके उसको end of 5 years में he is going to get this. So now what we have to do is we will have to typically split this. We will have to typically split this into 5 years. We will have to typically split this into 5 years. Okay. Now, how am I going to split it?
By discounting it.
Yes. One second. Salary would be 13,108. Benefit is how much? 1% of final salary. So this is your benefit, 131. Yes. Yes. So 131. No. Just a second. second. Just a minute. Just give me 1 minute. I just need one clarification. I'll do one thing. I'll solve it separately so that we can understand the workings. Okay. This is illustration 15. Okay, so this is your ultimate cost of benefit, 655. Okay, I was just seeing, trying to understand the working. Okay, so 131 for 5 years. So it comes to 655. Now this one, attribution. 131 per year. But this is at date of settlement, right? So now this I will have to bring it to the present value, because 655, when am I going to pay 655? I'm going to pay 655 at the end of 5 years. Yes or no? Bolo, tell me.
Yes, sir.
Yes.
Year 4, year 5. So therefore, now cost of benefit 131. Okay. Now This one, let us multiplying by discounting factor at the rate of 10%. At the end of 5th year, the discounting factor will be 1 because you are going to pay them off. Next. It's a reverse discounting. 909. Next. 826. Six, eight, 3. Yes. Did everybody get the present value as these figures? Yes. 89, 98, 108, 119 and 131. Geeta, did you get this?
Yes,
Yes.
sir.
Yes.
Abrikesh, yes. So
Yes.
this is how your cost will move. This is how your cost is going to move. Okay. And इसी को हम बोलते हैं current service cost. This itself is your current service cost. Are we able to follow?
Yes, sir.
Yes.
Yes. All right. Now, third one. We now populate this into the way in which the obligation will now get built up. The manner in which the obligation will now get built up. Okay. So, year 1, year 2, three, 4, 5. Okay. Now, opening balance. Tell me, is there any opening balance in year 1? Answer is no. Answer is no. On the opening balance, you would typically have interest at the rate of 10%. Answer is nil because obviously opening balance is 0. To this, I will add current service cost. To this, I will have my current service cost. What will be my current service cost?
89.
89. Yes. Add current service cost. Closing obligation. 89. Are we okay with this? Yes. First year is clear, everyone.
Yes, sir.
Now this will become opening balance for year 2. 89. Interest 9. Next. Current service cost for year 2.
98.
98. Yes. So that gives you 196. So 20 and 108. 324.
For 475.
What happened?
475 total.
475.
Yes.
Yes.
Six 54.
Yeah. 654, 655, 656. 655. Are we okay with this? Understood how the obligation has built gradually?
Sir, why interest used to 50 rupees, sir, instead of 48?
Oh, sorry, 48. I was very bad. 48. 654. Yes. Are we okay with this? How the
Yes.
obligation has built
Yes.
up gradually?
Yes, sir.
Yes. So this is exactly how the things work. Okay. Now, all of us are students. Yes. So in your life, things become little easy. In your life, what happens? You are given ultimate cost of benefit will be so much, or they give you mechanism to calculate. They will give you the discount rate. You have to do the hard work by putting things in this table and calculating, which is after all not so hard. Yes. The problem arises in real life. In real life, what will be my discounting rate? In real life, how much tenure should I consider? All this work, thankfully, gets done by specialists in this field, whom we call as actuaries. Is it okay? Yes. So typically standard recommends you to go in for an actuary because they will be the best, what you can say, they will be the best people to work on estimating this liability as well as this particular requirement. Is it okay? Yes.
Yes, sir.
Yes.
So that takes care of defined benefit plan first part. Okay. Now, this is done for you. Illustration 15. Now, there are two small theory questions, but interesting ones. Okay. Read this. Read this question. Did you understand the question? Have you
Yes,
understood the question?
yes, sir.
Yes,
My question is that how that the employer will come to know the post-employment medical expenses, how much? Is it is based on the past experience on the average?
that's precisely the problem that all of us face. All right. When you come out with such fancy employee benefit, that's a problem that all of us have. Because at the end of that 20-year, 30-year, whatever they have given in the question, at the end, they are reimbursing for post-employment medical cost. Now, post-employment medical cost, what all are you going to estimate? Is he having heart problem? Is he having kidney problem? Is he having any other problem? What exactly is the ailment? I don't know. And what will be the cost for that ailment? With advancements in science and technology, surgery cost should come down, medical cost should come down, but medical inflation goes up. So all these introduce a huge amount of complexities. You are able to understand, everyone? Yes?
Yes.
Yes or
Yes, sir.
no? So I'll just give you an example. So this was for one of our in one of my family only. So he was working for the BSNL company. You know BSNL, right? That is a public sector undertaking. So they worked in BSNL for close to one of my known contacts. They worked in BSNL for the entire life. Okay. That generation was typically, married to one company. Okay. Now it's more into, we look into our interests and work, but the previous generation, they were typically married into one company. So they joined BSNL. This contact of mine joined BSNL when he was probably 19 or 20 years of age, and virtually till 60 years they were with BSNL. He was with BSNL for about 40 years. Now, BSNL came out with an employment benefit scheme at that point of time. That employment benefit scheme provided that they would reimburse all expenditure post retirement. They would reimburse all expenditure post retirement. Now, what happened is, unfortunately, after retirement, he had to undergo, he had certain kidney issues, certain kidney ailments, because of which for close to 12 to 13 years, every after retirement, I'm telling, at around 61, 62 years, till 12 to 13. Okay. In that point, he had to undergo dialysis at least thrice a week. And all of this was reimbursed by BSNL. The question that now arises is, this is an employee benefit that was served, that pertains to the period when he was in service. He began service somewhere in 1970. 1970 to 2010, 40 years he worked with BSNL. 2011 onwards, you started moving into a daily dialysis routine where you are incurring the cost and the company is reimbursing you for it. You can imagine the complexities which are involved when somebody joins an organization in 1970, works till 2010, and 2011 to 2024, you undergo something as lengthy as a dialysis procedure, and effectively the service that you rendered here is getting compensated here. Are you able to understand? The question that arises is, as Swaminathan rightly asked, how can I estimate in this tenure the cost that will be incurred here? Yes or no? First of all, do we understand the complexity of the problem? Yes. First of all, do we understand the complexity of the problem, everyone?
Yes.
Yes.
Yes, sir.
Because see, this is a kidney, this is a dialysis. Okay, fine. Today you have dialysis which happens, say, 3,000-4,000 rupees or whatever it is. But consider employees, consider persons where you are incurring oncology, for example, the cancer. You undertake chemotherapy, radiation, XYZ, those drugs. Then there is a phase where you are out of the symptoms. Then again it comes. How can I estimate in this period for post-employment cost? It's extremely complicated, extremely difficult, extremely what you can say, you need an other level of expertise to calculate this. Honestly speaking, you and I, our line of profession, we don't get, or we are not expected to estimate this, you and I. These expectations are carried out by actuaries with HR. Now see, HR fills up a form, right? When you join employment, they give you one form to fill. What all is there in that form? Can somebody try to recollect? When you join employment, you will be asked to give your name, your father's name, your mother's name, your brother, sister, sibling, spouse, all those details. You are required to give your health details. You are required to give your health details. In your health details, you will be asked to feed, of course, your height, your weight. You will be required to undergo certain diagnostic tests. In those tests, maybe some new factors will come up. Along with those tests, they will mention what is the hereditary risk of this person. So suppose if a person is in a person's family, there is a risk of heart disease, then the risk of heart disease will come to this employee also. And that will get factored by the actuary, provided the employee has fed the data correctly while giving to the HR, and HR has put the data correctly while giving to the actuary. In any of these things, if there is a miss, then what happens? Then ultimately data does not get captured, obligation will not get recognized properly. In all these cases, you understand, we are not interested in accuracy of the amount. We are interested in making an estimate of the amount. Estimates can go left, right, center, haywire they can go, because this field is like that. But again, as I said, the source of this data is nothing but what? It is my uh, actuarial data which comes from HR data. If HR data contains all these particulars, all these demographic particulars, then I agree that you are going to be estimating some things in some manner. Are we able to understand? Yes.
Yes.
So now in this particular question, what do I have? A post-employment medical plan reimburses 10% of an employee's post-employment costs if the employee leaves after more than 10 and less than 20. 50% if he leaves after 20 or more years of service. So if I put it into a timeline, these questions are best done with the help of a timeline. Okay. 0, 10 years, 20 years and more than 20. 20 years and more than 20 years. Now 10 to 20 years, 10-year period. Yes. And here you will be reimbursed how much? 10% of an
10%.
employee's, yes, 10% of post-medical cost. Post-medical cost. After 20 years, how much is the reimbursement?
50%.
50%.
But here one thing is sure, that if the employee is leave within the 10 years, there is nothing it can be done.
Yes, and here there is no reimbursement. Okay. So now, suppose you are in year one. You are in year one. Now, I have to estimate the benefit of this, the cost of this benefit. How will I estimate, and how will I attribute that benefit to the periods of service? So, employees expected to leave within 10 years. Employees expected to leave within 10 years. Will I estimate anything?
Nothing.
Answer is no, not needed. Because for obvious reasons, nothing is payable to them, so it is zero. Next, 10% of post medical cost. 10% of post what 10% of medical cost. Okay. If he leaves after more than 10 and less than 20 years. So after 10 less than 20, this is typically a 10-year period. Yes or no? So 10-year period, they are reimbursing 10%. So therefore, the attribution that will happen is 1%. Yes or no? The attribution that will happen is 1% per year. Correct? Bolo? Yes or no?
Sir,
Yes, sir.
how sir? How sir? 1%?
See, 10% of post-medical cost over a 10-year period. So now what you will do in year one, I will put my employees into different buckets. Okay, I'll just write it here only. Year one, I'm estimating the liability. So employees expected to leave within 10 years. I will not provide for anything. Correct? Next, employees expected to leave between 10 to 20 years of service. Yes, here you are going to get 10% of the post-employment medical cost, provided you complete full 10 years. Yes or no? That is 10th year, 11th year to the 20th year. Yes or no?
Yes.
That means 1% per year. Correct? 10 by 10 is 1% per year. Yes or no?
Okay. That 10% you are splitting towards 10 years.
Yes, towards 10 years. So suppose, let
Oh,
us suppose who is there here in our class. Let us suppose you are estimating for Manish. Manish's profile indicates that he will live in this organization for at least 15 years. After 15 years, Manish's growth will become exponential. Our organization will be small for him. He will look for better options. So Manish's post-employment benefits, I will provide at the rate of 1% per year for 5 years. That means 5%. Are you able to follow? Yes?
yes, sir.
Yes? All right. Now let us come to the next one. Employee expected to leave after 20 years. Okay. Now, let us suppose Geeta. She is a lady who is working in this organization and she aspires to take this organization to greater heights. She aspires to become the CFO of this organization and thereafter she will become the CEO. And therefore, she will ultimately remain in this organization by giving it all of her professional expertise and professional time. So therefore, we estimate that Geeta will remain not less than 20 years. So if she will leave not less than 20 years, that means after 20 years, every cost that she incurs, 50% of that will be reimbursed. Yes or no? Yes or no? Bolo? 50% of
Yes.
that will be
Yes.
reimbursed. So therefore, 50 divided by 20. Can I say 2.5% per year I can make a provision?
Yes, sir.
So
Of
first
course.
20 years, 2.5, 2.5, 2.5, I will make it for first 20 years. It reaches 50% by the time Geeta has completed 20 years. Then in 21st year, I definitely hope Geeta remains healthy. But in the 21st year, suppose she incurs some medical cost, 50% of that will be met out of the provision which you have already created. Yes? Did you follow?
Yes, sir.
Yes.
This is logical.
Logical. Same for the first case also. Manish's cost 1%, 1%, 1% I have accrued for 10 years. That means 10% provision already made. Yes or no?
Yes, sir.
Yes.
Yes, sir.
Correct. Now, when he leaves in the 12th year, am I still going to give him 10%? Answer is yes. 10% will come out of where? 10% will come out of the provision which I have created in Manish's name. Correct?
Yes, sir. Then
Okay.
1% will move to 2.5%. If he is
1
there,
percentage will move to 2.5%. Yes. Now
then
suppose
if he
let
continue,
us let us take the case of Abrakesh. Abrakesh, I thought that he will live for 15 years in this organization. But Abrakesh became so dedicated with the company that he went on to become a COO of the company, that he specialized into operations along with his expertise in finance, that the company has ensured that he lives in this company and they're taking care of all his requirements. So Abrakesh now does not feel the need to resign. So what did you do initially in the case of Abrakesh? You have provided for 1% for the first 10 years, correct? For the first 10 years, you provided at 1 percentage. Yes or no?
yes,
Yes.
sir.
Yes.
Now, years 11 to 15, you expect that he will leave, but he does not leave, correct? So
Yes, sir.
therefore, you would not be providing for anything between 11 to 15 years because 10% you have already provided. But suddenly in the 15th year, you come to know this fellow is not leaving only and is rising to a very high senior position. So for years 16 to 20, you will provide for the 50%, out of which 10% you have provided, balance 40% I will provide over 4 years. 10% I will provide each year, 5 years, 8% per year. Did you follow? Yes or no?
Sir,
Yes, sir.
for not making provision for 11 to 15 years. What is the
Yes.
logic, matlab? It is mentioned in the study material also.
No. The logic is that I expect him to leave. Correct? The logic is that I expect him to leave. Yes or
Yes.
no?
Yes.
मैंने 10 साल का प्रोविजन बना दिया. First 10 years I have already made a provision at 10%.
Yes.
Yes or no?
Yes.
So the fact is that provision is already there in my books for the employee who is leaving between years 10 to 20.
Okay. Yes.
Correct. Now, if he does not leave, so in this case, for example, years 1 to 10, I already made 10% provision. Correct? This is the first part. Years 11 to 15, I expect him to leave. I expect him to leave. So will I make a provision? Answer is not needed. He's already carrying a 10% provision.
Okay.
Yes.
Yes. Yes.
Now, year 16 to 20, he does not leave. He continues with the organization. Because he continues with the organization, now I should make a provision of 50%, na? Because after 20 years, I will be paying 50% of post-employment medical cost, correct?
Okay. Got it, sir. Yes.
But
Yes.
out of 50, 10 you have already provided. So remaining 40 over 5 years, 8% per annum, I will make a accumulated provision. 8 in year 16, 8 in 17, so on and so forth. Is it okay?
Yes, sir. Thank
Yes.
you.
All right. And Swaminathan joined recently, very fast mover. So he ensures that within every 5 to 6 years, he moves companies to gain industrial expertise across multiple industries before he becomes his own, before he opens his own consultancy firm. So Swaminathan we don't have to make any provision for him because he's a mover across industries. Are we able to understand how the provisions are working? Yes.
Yes, sir.
Again, this is indicative. There may be different ways provisions will be done, different ways estimates will be handled. It's truly a very interesting but very complicated activity that is happening here. Because first of all, in the case of Geeta, 20 years, who knows 20 years? Next attempt only though we are very optimistic about our performance, there is a lot of uncertainty also involved with it. Now, if I have to predict for 20 years what will happen, if today on this platform I ask you, where do you see yourself after 20 years? We don't have an answer, and it is right not to have an answer. Okay, it's very, very difficult to predict, but still it has to be done. There is no, there is no point or there is no wordings in the standard that prevents you from providing. Provision is a must. Okay, all right. So that takes care
सर
of this.
सर
Yes.
ये आपने प्रोविजन कर दिया, उसके बाद अगर समझो 10 लाख का प्रोविजन किया है लेकिन उसमें से
Okay.
यूज हुआ है सिर्फ 6 लाख, तो 4 लाख इज रिवर्स और
Reverse it. If you have spent only 6 lakhs out of 10 lakh provision, reverse 4 lakhs. Go ahead and reverse.
टू रिटेन अर्निंग
Yes, to retain earning नहीं बेटा, to P&L.
टू पीएनएल.
आप
ओके,
प्रोविजन कहाँ P&L के थ्रू करोगे ना?
यस,
You will do a provision through the P&L. So reversal also will happen to the P&L. You will reverse it and credit employee benefit expenses. So employee benefit expense will be a huge expense. In that you will have a small credit sitting there. Okay?
यस.
Yeah. So it depends. Again, what will happen? Many times companies will say, keep it. Why you want to reverse? Somebody's will come higher. It is 10% of post-employment cost, medical cost. Post-employment medical cost is something I cannot predict. A heart surgery today costs say 7.5 lakhs. After 15 years, how much it will be? How do I know? It can either go up because of inflation or it can drop because today I have robots performing robotic surgeries. I have minimally invasive surgeries. So cost should effectively come down. So maybe 7.5 lakh after 25 years, it could be something in the range of 10 lakhs only. Whereas if I take inflation, 7.5 lakh after 20 years should effectively come to around 22 lakhs. Or sorry, around 30 lakhs, assuming money doubles every 7 years. So 30 lakh versus 10 lakh. Or it could be opposite also. Technology has made it even more costlier. Anything and everything could happen. Estimating this in the past was still little bit simple. Estimating this in current times with artificial intelligence, with robotics, with machine learning. 1 year ago, did I know that ChatGPT would be so predominant in our day-to-day lifestyle? Answer is no. People like you and I, we could not even imagine. Today, you and I are sitting and using these tools in our day-to-day work. So we don't know where the things are. The challenge is estimating these amounts. Complicated, definitely. Okay, so now coming to the next question.
Sir, sorry.
Yes. Yes, yes, yes.
What would be the treatment if actual payment turns out to be more than what we have provided?
If actual payment is more than what we have provided, then the differential amount will hit the P&L in the year when you make the payment. It is like a change in estimate.
Okay.
So suppose आपने 10 lakh provision किया, but you end up paying 12 lakhs. That 2 lakh will be cost in the year when you made the payment.
Okay.
And it is justifiable also.
Okay.
Okay, it is justifiable also. All right, fine. So let us move on. Next.
Yes, sir. Since this provision is a estimation, we cannot exactly 100% we can estimate the right amount. It will vary
E-
here and there.
Exactly. That here and there will be everywhere. Okay, because of the uh, abstract nature of provisioning that we are doing. It is like a decommissioning liability. How do I know how much I have to pay to decommission? But I have to do it. There is no go. Okay, so illustration 21. Hope
Yes, sir.
everybody understood.
Sir.
Okay.
But thing is, it should be best estimate based on
Yes,
that assumption. It should be very clear.
absolutely. Absolutely. Yes. And every year you have to revise that estimate also. It's not just that I do 1% of some amount. If you get further indication on medical cost, that 1% will remain, but the absolute medical cost, if it keeps on fluctuating, then even your provisions will keep on fluctuating. Okay. So that is how it happens. Coming to illustration 22, AKJ is a listed company engaged in business of manufacturing of electronic equipment. The company has various branch offices spread out across India and has 1,000 employees. As per the statutory requirements, gratuity shall be payable to an employee on the termination of his employment after he has rendered service for not less than 5 years, on superannuation, retirement or resignation, or on his death or disablement due to accident or disease. Completion of continuous service of 5 years shall not be necessary where termination is due to death or disablement. So here 5 years is mandatory. In the second case, optional, not required. Instead of saying optional, not required. Okay. Amount payable is determined by a formula linked to number of years of service and last drawn salary, which you have told me today morning. The amount payable to an employee shall not exceed 10 lakhs. Calculate the amount of employee benefit, if any, attributed to each year of service. Okay. Now, suppose in year one, I have to estimate the gratuity liability. I have to estimate the gratuity liability. What all buckets will I put my employees in? I will have to put them into various buckets now. Yes. So which buckets will you put them? First bucket, they are expected to serve for more than 5 years. That is the first bucket. These employees will typically be employees more than 5 years. These employees will typically be the ones who will take gratuity and go. Yes or no? Tell me.
Yes.
They will be the ones who take gratuity and will take gratuity and go. All right. Now, that is why, when you collect information from HR, they ask some data. How many children you have, how old they are, is your spouse working, is your spouse at home. Why do you think they ask all this? It builds up your demographic profile. Now you tell me, if you are in a small city, okay, small city, a tier 2 city, for example, Surat, Ahmedabad, Indore, Vishakhapatnam, or these kind of cities, Bhubaneswar. In these kind of cities, let us suppose Swaminathan is working as the CFO of one company. Okay. Now, Swaminathan would be having his children who are going to one of the schools in that particular place. His family is settled. He has his own residential property there, and and his spouse is also working. So now when I see all these particular factors, he has a housing loan also there. Okay. When I see all these factors, what is the immediate thought that comes to your mind? Swaminathan will be a settled candidate in this particular place. Yes or no?
Yes.
That is the first valid assumption that you have. His demographic profile indicates that Swaminathan will remain in this company and take gratuity. So, boss, I have to make a provision for Swaminathan's gratuity because he is a candidate who fulfills the requirement. But now suppose, again, see, the only woman is Geeta, so don't take me to be misogynistic or all those kind of things. I'm just making the discussion a very interesting. Geeta recently qualified her chartered accountancy, yet to be married. She can move anywhere depending on the profile that comes. How will you estimate the gratuity? You may probably say she, she may move around, and once she settles down, then she becomes a candidate for gratuity. So it's a very interesting concept where I'm marrying demographics with my accounting. The sad part is we become extremely casual when we are filling our HR data. Yes or no? How many of us promptly fill all the boxes in HR?
I agree, sir. I mean, it's not been taken in good spirit.
It doesn't. See what happens. HR data हम लोग क्या fill करते हैं? Name, date of birth, address, Aadhaar, PAN, bank account. That's it.
And qualifications.
Qualification. That's it. You just fill this and you give it. And unfortunately, HR also does not ask. क्योंकि for them, processing will be more now if you feed all this.
Yes, sir.
So give this data. And natija kya hoga? Estimation of provisions cannot happen properly. Yes? For all these reasons. Okay. So that's about it. So now in this case, how am I going to estimate? I will put my employees into a bucket of mortality, disablement, and resignation after 5 years. For employees for whom the formula does not, the payment of gratuity does not exceed 10 lakhs, then amount payable will be divided. Suppose I have only an executive. His gratuity will not exceed 10 lakh rupees. So what is his expected gratuity divided by number of years? I will make a provision and keep it in my books. But for somebody like Swaminathan or any of you, your salaries will go way beyond a high limit, which will require gratuity to be at the minimum level of 10 lakhs. For employees like you, your gratuity will be calculated by 10 lakh divided by expected years of service. If you're working for 10 years, one year, I will make 1 lakh. If you are working for 8 years, I will make 1,25,000 per year. If you are working for only 5 years, I will make 2 lakhs per year. So you need to estimate how many years you are going to be there in this particular place. Okay, so that takes care of illustration 22. Are we okay with this? Yes. Is it interesting? These facts I could not be covering in my day-to-day classes because most of it gets covered as part of, most of it we spend time in understanding the technicalities. Okay, all right, fine. Now we move on to the next one. Another question, yes. Cisca Limited has a headcount. Is everybody with me? Yes.
Yes, sir.
Yes, sir.
Yes.
Cisca has a headcount of around 1,000 employees. As per the company's policies, employees are given 35 days of privilege leave, 15 days of sick leave, and 10 days of casual leave. Areva, 60 days leave they are getting. Out of the total privilege leave and sick leaves, 10 PLs can be carried forward and 5 sick leaves can be carried forward to the next year. On the basis of past trends, it has been noted that 200 employees will take 5 days of PL and 2 days of sick leave. 800 employees will avail 10 days of privilege leave and 5 days of sick leave. Okay, fine. This is related to leave encashment. Also, the company has been incurring profits since 20XX. It has been decided to distribute profits at 4% during the year. Due to employee turnover, the expected payout is around 3.5%. Profits earned is 2,000 crores. Cisca has a post-employment benefit plan also available, which is in the nature of defined contribution plan, where contribution to the fund amounts to 100 crores, which will fall due within 12 months from the reporting period. The company has paid 20 crores to its employees in X0, X1. State what would be the treatment of the short-term compensating absences, profit sharing plan, and the defined contribution plan in the books of Cisca Private Limited. Also state what would be the treatment if the contribution paid from the defined contribution plan exceeds the contribution due. Further, what would be adjustment from defined benefit contribution plan does not fall due within 12 months from the end of the accounting period. Okay, fine. So Cisca Private Limited has a head count. So we start with here. This is the first part. This is the second part. This is the third part. Okay, now second part we'll do. First part is just theoretical. So we'll do second part. How much provision will you make? 2000 crore into 4% or 2000 crore into 3.5%? Yeah, that's what. Yes, tell me.
3.5%.
3.5. Because of the turnover, your 4% falls to 3.5. So 2000 into 3.5%, you will make a provision of 70 crores. That's right. So 70 crores is going to be your expense and liability. So second part is done. Cisca has a post-employment benefit plan, which is in the nature of a defined contribution plan, where contribution to the fund amounts to 100 crores. Out of 100, 20 crores has been paid to its employees. 20 crores has been paid to its employees. I think you know what? This particular sentence should have formed part of this paragraph. It's just a syntax adjustment. Okay. Total liability 100. Out of 100, 20 is paid. So another 80, you will have to make a provision and expense it out. Are you okay? Yes.
Yes.
Yes, sir.
So
Yes.
that's it. So third part also done. So this is done. This is done. Next, when you look at leaves per, they have not given the per day data and all. So what you have to do is you have to give your answer only in terms of number of days. That's it. Okay. So now 35 days privilege, 15 days sick, 10 days of casual. Out of the total P&L and sick leaves, 10 PLs and 5 sick leaves can be carried forward. On the basis of past trends, it is noted that the employees will take 5 days of PL. 5 days of PL. So therefore, 5 days of PL they will utilize. So therefore, you will have to make a provision for this. Yes or no? Tell me, 200 employees, they will take 5 days of PL. So you will have to recognize this and 2 days of sick leave. Yes or no? Bolo yaar.
Yes, sir.
Yes. And finally, 800
Yes.
employees, they will be taking in the future 10 days of PL and 5 days of sick leave. So you will have to make this provision also. Are we able to follow?
Yes.
Yes, you will be holding this as your provision. So that closes Cisca Limited. Okay. So we have done this. All right. Now, question 5 is done. Now let me move on to the next one. Okay. Fine. Now, if we run through this, I think we are all clear about defined benefit plan, the liability side. Yes or no? Liability side, are we clear? Yes.
Yes, sir.
Now, many times what will happen is you may end up not having cash to meet the obligation, because see, these are obligations which come after 10 years, 20 years, so on and so forth. Okay. At that time, when an employee leaves, you need to have money in hand. Yes or no? Otherwise, you will be in a trouble. So therefore, what companies do is they put their money in specialized assets. Typically, what companies do is not good company, not good bad, but typically companies which have the manpower and the speciality, what they do is they will carve out a separate trust. They will carve out a separate trust. They will put this employee benefit money into that trust, and that trust will then invest in certain instruments, and after that it will give returns. When employee resigns, he will get money from that particular trust, and it will be deemed that the company has fulfilled its obligations. It will be understood that the company has fulfilled its obligations. Are we able to follow? Yes.
Yes, sir.
So when I do this investment in assets, the key point to remember is that I will be netting off the liability with the asset. I will be netting off the liability with the asset. Sir, why do I do that? Because my assets are specially meant to meet the employee obligations only. This asset cannot be used by anybody. This asset cannot be used by anybody once it is earmarked for employee obligations. In fact, even if your company goes under seizure because of any default under the tax laws, they can seize anything and everything except employee obligation money. Yes, they cannot go to that trust and demand that money, because that company, that is not company's money anymore. That is laid out specifically for the employees. So we do a net settlement. We do a net settlement. So on similar lines, I want you to go through this question, which I am now going to put up. Okay. We have done this question in class. I think we have done this question in class. 1 second. Yeah, this is the one. Yeah, go through this question. Is it visible? Yes. Go through this question. I'll just come in a minute so that we can solve this. This will be among our last session. Okay, so go through this question. Yeah, you could go through. Yes. Could we go through this question?
Yes, sir.
I think I have done this in the session, but I'll just recap it for you. Okay. So now, see, I will be running you through the accounts first because that is something which we are very comfortable with. Then I will show how it is presented on a net basis, which is exactly how we do it in the for the reporting purposes. Okay. See, Arunachalam operates. Okay, so what I'll do is I'll open this and I will refer from here. Okay, this is your assign. These are your notes. Okay. Arunachalam operates a defined benefit plan for its current and former employees. Given the large size, it has engaged a firm of actuaries for advice on contribution levels and overall liabilities of the plan. The following details are presented. On 1st April, the actuarial valuation of the present value of obligation was 15 crores. This is the obligation. On the same date, the fair value of assets was 13 crores. So, opening balance of liability is 15 crores. Opening balance of asset is 13 crores. Is it okay? Yes.
Yes.
Yes, sir.
On 1st April, the annual yield on government bonds was 5%. This is your interest rate. This is your interest rate. So can I say that I will have to calculate my interest on that? So 13 lakhs into 5%, that, sorry, 13 crores into 5%. Can I say that gives me 65 lakhs?
Yes,
Yes or
sir.
no?
0.65. Yeah, 65
0.65.
crore. 65 lakh.
Yes, 0.65, correct. And can I say interest will be 15 crores into 0.05? So 0.75 crores, 75 lakhs. Because
Yes, sir.
same
Yes,
interest
sir.
rate will be there for the unwinding of discount on the other side also. So 75 lakhs and 65 lakhs. Okay, so this adjustment is done. During the year, Arunachalam made contributions of 1.75 crores into the plan. So what does this mean? Money is paid into the plan. That means I have invested in the assets. Yes or no?
Yes.
Asset will
So
increase, the plan asset.
asset will increase. So 1.75 crores asset is increasing. Geeta, are you following?
Yes, sir.
Manish?
Yes, sir.
Okay. So 1.75 crore went into the asset. Next. And the plan paid out 1.05 crores to retired members. When plan pays out money, what reduces?
Plan value. Investment reduces.
Plan
So,
and liability also.
so
Liability
both
also. Yes,
both will reduce.
both will reduce. Investment will go down as well as your obligation will reduce.
Yes.
So 1.05 crore credit to investments because investments are going out, and 1.05 crore debit to the obligation because obligation is getting paid. So this figure is done. Next. Current service cost for the year was estimated as 1.55 crore. This is the cost which has to hit your P&L and go as a liability. It is your current year's provision. It is your current year's provision, right? So 1.55 crore credit to the obligation. Is it okay?
By
Yes, sir.
debiting the P&L, it will go here.
Correct. Debit the P&L, credit the obligation. Yes. So that is done. Next. On 28 February 2020, the rules of the plan were amended with retrospective effect. Maybe some arrears or something came in, which led to an increase in the present value of obligation. Basically, it has increased the liability. by 37.5 lakhs. What is this? This can be treated as a past service cost because it is amended from a retrospective date. Are we able to follow? Yes.
Yes, sir.
So it is increasing the obligation. It has to hit the P&L immediately. So by past service cost, 37 lakh 50,000. Any doubts so far?
No, sir.
No doubts. What about Geeta, Manish, Swaminathan?
No, sir, no doubt.
Sir,
No
here
doubts.
why we are crediting to that provision, sir?
Liability is
This is a
increasing,
past
na?
employee cost, right? Okay, which is not yet paid.
It is not paid. It has come now. Okay. It is like
Okay,
saying,
just we are.
yeah. So suppose it is like saying, see, I was making a provision for my regular on-roll employees, but suddenly I came to know that my contract labor service provider, he is not paying gratuity. So as a principal employer, I am liable to pay gratuity for my contract labor also, who is doing my housekeeping and security guard services. So now I have to bring all of that into my books as my cost. So suddenly I book that as a cost. That becomes like your past service cost. Is it okay? Yes.
Yes.
Yes, sir. Okay, it's a kind of retrospective increase. Now they assessed that.
Retrospective.
Now they assessed that this kind of increment to be paid to the past service. So we
Correct.
are
Now,
creating the we are creating the provision for this.
correct. We create now and going forward, we will keep it as a regular provision.
Yeah, right, sir. Got it.
Okay. All right. So 37.5 lakhs. Next, during the year, Arunachalam was in negotiation with employee representatives regarding planned redundancies. These negotiations were completed shortly before the year end and the redundancy packages were agreed. The impact of redundancies was to reduce the obligation by 2 crores. Redundancies means they are moving out your employees. Before 31st March, Arunachalam made payments of 1.875 crores to the employees affected by redundancies for a curtailment of their benefits. These payments were made out of assets of the retirement benefits plan. So what did they do? 1.875 crores paid. This is physical money which has gone. And by paying 1.875 crores, 2 crores of liability is
Decrease.
decreased.
Due
2
to curtailment.
crores of liability is, yes, this is your total position. So in your assets, I paid 1.875 crores. And in my liabilities, this is not gain on settlement. This is reduction in obligation. 2 crores. Are we able to follow? Yes? Yes or no?
Yes.
So
Okay,
in
sir.
effect,
Sir, one query. Actually, total liabilities is 2 crore,
yes.
out of which 1.875 crore only is paid to
No,
him.
no, no. I
Uh,
paid 1.875 crores. By paying
okay.
1.875 crore, liability worth 2 crore has reduced. Okay.
Okay.
See, because what I have done is probably I estimated more, but because I'm retrenching these employees, that much obligation was not required to be maintained. So effectively 2 crore worth of obligation is gone. Yes or no?
So, sir,
Okay, sir.
12.5 is gain on settlement, na?
Absolutely. 12.5 lakh is gain on curtailment and settlement. Absolutely right. Okay.
Sir, my question, what is the actual liability to him to be paid?
Actual liability was, see, what you would have done. What is this 2 crore provision? These 2 crore provision is assuming that they will continue till, let us say, 31st March 2030. I thought they will continue. But suddenly AI came, suddenly I got into technology, I moved into automation. I realized that I don't need these employees. So these employees, I retrench them today. When I retrench them today, as per the formula, I don't have to pay them 2 crore rupees. I have to pay them only 1.875 crores because 1.875 crore is the liability which is sitting today based on the plan formula. Do you agree?
Yes,
Yes or
sir.
no? But you have made an extra provision. Why? Because you are thinking they will continue till 31st March 2030, and therefore you have made an extra provision for that. You are calculating their additional salary, you are calculating the increments, and then you are determining the gratuity. But it is not required because you are retrenching them now immediately. So therefore, retrenchment today will happen based on today's salary. It will happen based on today's cost. And today's cost is worth only 1.875 crores. So you made excess provision of 2 crores. So reverse entire 2 crores, pay 1.875, take 12,50,000 as gain on retrenchment, on gain on settlement and curtailment. Are you able to follow?
So, which means that 2 crore it is there in the provision. So 2 crore we are
Yes,
eliminating, and
absolutely.
actually we are paying 1.875 crore.
Absolutely.
That is the
Yes,
reason we are reducing from the plan asset.
absolutely. Absolutely. Okay, clear. All right, fine. So that is done. Next, no. On 31st March, the present value of the obligation was 17 crores. Fair value was 14 crores. So this is your closing balance. This is given. This is given. So these are your balancing figures. Assets 1 crore 52 lakh 50,000 gain. Liability 2 crore 37 lakh 50,000 loss. So this is your actuarial gain or loss. Now coming to your P&L, I am having current service cost 1.55 crores. I am having interest cost 75 lakhs. I am having past service cost 37 lakh 50,000. I am having interest income 65 lakhs and gain on curtailment and settlement 12 lakh 50,000. Did you follow? Yes
Yes,
or
sir.
no?
Yes, sir.
Perfect. Actuarial gains and losses, we show it in your other comprehensive income. So actuarial loss 2.375, actuarial gain 1.5. So net is 85 lakhs of actuarial loss. All right.
Sir, which means that 12.5 is we have the credit income. On the
Yes.
entry, the provision is debited 2 crore, credit to plan asset
Yes.
1.875, and credit to P&L 12.5.
Correct. Correct. Absolutely right. Did you follow?
Yes, sir.
Swaminathan? Yes. You are convinced on that?
Yes, sir. Yes, sir.
Okay.
I say my actual question was not
Hmm.
this.
Hmm.
I'm thinking that actually no. Whenever that we have the liability, the provision
Hmm.
is created one side and the plan asset is created one side. See, we try to match whether that the plan asset is shortage or high.
Hmm.
Then actually the 2 crore already in provision. Definitely we should have invested that amount in the plan asset as well.
Okay. Let me just interrupt here. Standard does not mandate you to invest in plan assets. Okay. And secondly, it depends on an entity's cash appetite. If an entity is cash rich, entity will say, I don't need plan assets at all. I will manage based on my everyday cash flows. I have adequate amount of money always. Is it okay? Right?
Right, so its plan asset creation is depends upon the cash position of the entity.
Correct. 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 So sometimes organizations become conservative And because they become conservative, they say better to set aside employees' liability. They'll set it aside. But because of these issues, there will be a mismatch. So don't think that we have to match. It's not mandatory. Okay.
Okay, right. So, that was my assumption
I
earlier.
know, I know, I know.
That was the question I asked those questions.
Oh, okay. So it's
That's a
not
tri-
mandatory.
yeah. That was a triggering point actually to me.
Okay. All right. So coming to your final presentation, in your final presentation, you will do a net presentation. You will have present value of defined benefit obligations and
Sir,
fair value of
in extract of cash flow statement, one figure is missing, sir. 1 crore 5 lakh. That is benefits paid is also
extract
there.
of cash. 1 second. I think, yeah, 1 crore 75 lakhs is there na here. 1
There is
minute.
a benefits paid is also na. One
This none,
point.
no, one, you are telling this 1 crore 75, some figures are missing, right?
Yes, sir. Yes.
Yeah.
1.05 crore is missing.
Agreed. But
Okay.
the point is, see, this 1.05 crores, what will happen is your plan assets will come to your cash and you will pay. So from a company's perspective, it is investment going out. That's it. You are able to follow. See, I set aside money into investments. Cash has gone into investments when I made plan assets. Are you able to follow? Now, when my plan
Yes.
assets reduce, it will first come to cash and then to employees. You can treat it as if it is happening like this. But in reality, what happens is directly the plan assets will go to the employee at the time of settlement of the obligation. Are you able to follow?
Sir, here the question said it's a debit credit routing is not there in the cash book.
It is there
Which
now. 1 crore
means
5 lakh
that
is there.
1.05 lakhs is a debit and credit.
Yes.
No. We got it that perspective in plan asset it's there, in the provision is there, but in the
Yes.
cash book, bank book, it's not routing.
It's
So
not rooted.
routing
It
is
has to
missing.
come on
So
both
debit
the sides.
credit in the form of
It has to come on both the sides.
yeah.
So
That's what.
Manish, even if it comes, it has to come on
Yeah.
both the sides. Okay, this is shown as a net position.
Yeah.
Okay, sir. Okay.
Sir,
Yes.
in practice, actually, what happens is कि we invest in a plan asset. For example,
Yes.
LIC plans are
Correct.
there.
And
Then
they pay directly.
they pay directly to the employee.
Yes,
So
absolutely.
no inflow or outflow in our books.
Absolutely. Because see,
Yes, sir.
typically this is how it
Presentation in
happens.
exam. Sir,
Yeah.
presentation in exam
You
in
can do
this
it on
way.
a you can do it on a gross basis. No issues. Okay. You can do
Okay.
it on a gross basis. But normally, as Abrakesh said, we keep it out of our operations. We put it in a separate trust or we put it in an LIC so that when somebody resigns, retires, whatever, LIC will settle the employee. We are out of it. Okay. So that is how it is handled. So that takes care of net settlement and even what all goes in the P&L we have already discussed. Okay. So I think with that, we have kind of come to a close on whatever we had to discuss. Okay. So then, of course, you have disclosures and finally you have termination benefits, which are benefits that are paid when you are terminated from employment. Okay. So those are all small things in terms of concepts. Okay. Basically, it is what we have in terms of defined benefit plans. You have a lot of similar calculations for other long-term benefits as well as termination benefits. Okay, so with that, I think we conclude today's session. If there is anything, any question you do, let me know. Yes, Swaminathan, tell me.
Sir, here it is a defined benefit plan. Actually, the responsibility is with the entity, not by the see. It is not a contribution plan. So
Correct.
even though the planned asset is set up by different unit by the
Yes,
employer, then
yes.
it is obviously the responsibility of the employer only.
Responsibility will always remain of the employer.
Okay. That
Yeah.
the who will pay that liability? So employer will ultimately pay the liability to
See, if the plan asset does
employee,
not
right?
pay, employer has to pay. But plan asset is my own contribution, right?
Right,
So
sir.
ultimately, the
To
arrangement is done in such a way that we communicate to an entity like LIC that, look, this employee has resigned, you please release the fund. So LIC is more like a trustee. It will release the funds depending on instruction that it gets from us. Okay.
I need one clarity whether that the LIC will
Ah,
give the fund to employer and the employer will
employee.
pay.
It will give it directly to the employee.
So what is the real life situation? That's what I want to know.
Real life only, this is what happens.
Okay, okay.
Fund moves directly from LIC to the employee. Employer does not come into the picture.
Okay, then
Okay.
in that case, then the routing the cash account is not applicable.
It won't happen.
Okay,
Yes,
okay.
it
Yeah,
won't happen.
yeah, it
Yes.
was still the doubt is not clarified within me. So that
Okay.
is the
Okay.
reason I asked this.
No, normally because we don't want that money to come and route it through us. So normally we ensure that the fund houses directly remit the settlement to the employee himself or herself. Okay.
Okay, sir. Thank you so much. Perfectly
Yes,
fine.
yes, yes, yes. Okay. Okay. That's it from my side. Yes, madam.
Good morning, sir, and good
Good
morning,
morning,
students.
madam.
Good morning. And thank you, everyone, for being consistently joining all the LVRC sessions, and hope you are enjoying it and you are finding it beneficial. And in case, again, I am just repeating, in case you want any other standard to be scheduled for this LVRC session, let us know through our feedback, through the feedback form. Okay. Thank you, everyone.
Thanks,
Any
everyone.
question? In case students
Thank
have any questions to ask, they can ask. Okay. Then, sir, we can wind up. Okay, Saminathan wants to ask something. Yeah, Saminathan?
Yes.
Ma'am, please schedule the class for related party transaction, ma'am.
We have not scheduled. We'll see. Okay, we'll see. What we can do, we'll do it. We'll definitely do it. In case it is not scheduled because of shortage of schedule, then we'll schedule it in our open house session. Okay?
Okay, ma'am. I have seen that schedule, the related party is not there. So yeah, it
For
is a tricky one.
LVRC? For LVRC? Okay,
Why
we'll do that. We'll
LVRC
do
is
that.
not there?
Okay, I'll take care. I'll do it. Na? I'll try to get one extra schedule if it is possible. And if it is not possible, I'll schedule it during the open house session. Okay?
Okay, ma'am. Thank you so much.
Any other standard you want us to cover?
No, other they covered it, ma'am, I believe. The most of the standard.
Okay. Sure. Okay. Thank you. Thank you,
Okay.
everyone.
Okay,
Thank you,
madam.
sir.
Thank you. Thank you, ma'am. Thank you. Thanks,
Bye.
everyone. Thank you.
Yeah, yeah.
Yes. Yes, yes.
Good day.
Thanks.